Okay, so we're doing a little one-on-one session. So once again, I was walking him through what is the first time frame. It's a new day. The first thing we do, we start on the monthly time frame, top-down analysis, and we can see the first thing we see is that we're at all-time highs. And you want to take a look at the most recent candle, and you can see it's bullish, and it looks like we've already put in a low, but we also see there's a monthly gap there, a monthly IFVG. So I want you to mark out that monthly IFVG for me.
Is it right here?
Yeah, generally. Let's see if you get it. Let's see if you get the. Also, you can star certain whatever
Yeah,
your
I do
favorite
for the-
ones. It's right. Yeah, perfect. You'll be using that a lot. So let's see if you get this right. Perfect. And then now do it so it's the IFVG so it covers both of them. Let's see if you remember how to do that. Because you see
Both of them?
there's a bearish fair value gap as well.
Right here?
Yeah. So you can, and you see how they overlap? That's your IFVG right there. So you can remove the first
Yeah.
box you drew.
This one?
Perfect. Now that's your monthly gap. Now we drop down to where? The weekly.
Weekly.
Perfect. And now we can see, okay, you can make your box a little smaller now.
Like, how small? Like down?
Well, do you see the weekly gap?
Like this?
A little bit smaller. Yep, there you go. Well, you had it a little bit larger. A little bit larger. Perfect. Well,
Is it right here?
yeah, perfect. Yep. Now drop down to the daily. Oh, but on the weekly, actually, go back to the weekly. You can see a little bit
Yeah, 'cause
further
I was
up.
like, wait,
Even further up, we have another weekly gap up there. Right there.
where is it?
A little bit further up.
Right here?
Nope. A little bit further up, like towards regular price. Yeah, right there. So mark that out as well. And that's probably what will be I've been looking for that. We haven't quite retested into it, but we are at all-time highs, so it's something you want to keep note of. So now drop down to the daily.
Get rid of this one then?
You can yeah, it's not really needed for now. That would take weeks to.
Daily.
So now we see on the daily that now we want to start thinking about the power of three. So I want you to see, do you see how we ranged for that week right there? From Tuesday, well, not quite Tuesday. Yeah, it started about Tuesday, and then yep, right there. It started there. Grab your box. And then you start, just mark out the accumulation. So from Tuesday to uh two candles back, one more candle back. That would be our accumulation right there. And you can make the box a bit smaller. So just like make it horizontally smaller.
I need to make this not infinite.
There you go. Perfect. So that's our accumulation. You can see that's our range. And this is on the daily time frame. So we range for about a week, which shows we're going to have a good bit of expansion. You can just mark that with an A, accumulation, consolidation. And then let's drop down to our 4-hour real quick. Now this is super important. On your 4-hour, you can see we kind of put in a little manipulation move on the bottom there. Do you see that candle with the weird wick? No. Yeah, I would say the little bit that. I would say a little bit that, and on the right side, yeah, right there where your mouse just was. Right there. Yeah, I would say that's kind of our accumulation or our manipulation move to go longer. So you could mark that out as M, like draw a box and say that's the yeah, I would say that candle is the manipulation right there. It's all the way to the bottom of the wick. Yeah, that I would say that's our manipulation right there. Because we took out, if you look, we took out those lows to the left, or at least it looks like we swept them. So move your cursor to the bottom of the wick and put the box to the very bottom of the wick and draw like a full horizontal line right there at the bottom of the wick. I want to show you something real quick. So right click.
Right.
Yeah, perfect. And then drag it to the left. Yeah, like that. Perfect. Now drop down to the 1 minute or the 5. Actually, go to the 5 minute. And then find that little ray. And it looks, you see how we swept those lows? Pretty much.
Right here or back here?
Back there. You see how actually there was a small little gap right there that looks like we tapped into? So zoom in right there. Yeah, zoom in even further. You see how your ray aligns almost perfectly with that 5-minute gap right there? That bullish one, that bullish little gap right on the center of your screen. Yeah, it's in that area. Try marking that little gap out. Yeah, it's in there. Perfect. And then there's a little no, not quite. There's a little bullish fair value gap in there. Keep zooming in, zooming in. It's right on your ray. Yeah, right there. Perfect. So you can see that the market doesn't make mistakes. Even on the higher time frame, we dropped all the way down and you could have gotten a perfect long entry right there. So,
Right here.
yeah. So you can see that the market doesn't make mistakes. We manipulated into that and then we went longer. So go back to the 4-hour real quick. So we have our accumulation, we have our manipulation, and now we have our long distribution. So you can mark out the distribution's easy. I mean, it's just that long move right there. It's just a
Here?
bunch of, yeah. So it's, yeah, there you go. So now you have a general picture. You can delete all of that. You have a general picture of what's going on. You're like, okay, we're going longer. We're still expanding. We're still in the expansion move. So overall, you know what part of the move we're in. And you're like, okay, this is a viable time to take a trade. So now, this is where the 4-hour comes into play. Do you see that very prominent 4-hour fair value gap at the top? Right near where price is currently at. Yeah, right there. Mark that out. So now on Monday, this is what we'd want to be looking for. This is a perfect opportunity for longs. You can drag it across to the right. You can see how we're perfectly tapping into it. This would be a great
We're
place
going
to,
up already?
yeah, this would be a great place to long out of. Not only on the higher time frame do we know that we're now in the distribution phase, but we also see an entry on the 4-hour. So drop down to the 1-hour now. And you can see, okay, you see how the bottom 1-hour gap got tapped into. You see those two 1-hour gaps right there on your left side? Yeah, okay, let me explain it like this. You have it already marked out. You have it marked out with the 4-hour. It was the first
Oh,
thing.
it's this one?
Yeah.
Let's hit.
I wish I
Then it
could.
goes right here.
Yeah, you see how the 4-hour split into two 1-hours?
Yeah.
So you see how we tapped into the second 1-hour as well?
Yeah.
So you can make your box smaller.
Like how much more? Like that?
Bring it down to the second 1-hour. So bring it down.
This one?
Yeah. Bring it down a little bit more. Yep, perfect. That's perfect. So you can see how on the right side, current price, we tap perfectly into it.
Yeah.
That would have been a great long entry right there. Tapping into the 50%. You see how we tapped into the middle of it on that dotted line?
Yeah, right in the middle.
Yeah,
Right
that would have been a perfect entry. You would have had very little drawdown. It would have been perfect. So now what I want you to do is drop down to the 5-minute or the 1-minute actually, because that's normally we take entries. Drop down the 1-minute and scroll and find that entry. So that looks like it was PM session 1 minute. So you can pull up the replay tool and put us back to that time. Yeah, so click right there.
here?
Yep, sure. Let's do that. And then you can't set limit orders on the replay, unfortunately, but theoretically, let's say your entry was at the equilibrium, which is the middle of your entry is basically that dotted line right there. So as soon as you can press the side button, the little arrow, yeah, that one, and that'll take you. So now go back a couple bars. Go forward 1 bar. And now enter. And then drag your stop loss to the bottom of that candle. Or to the bottom of the wick. The bottom of the wick. Alright, perfect. And now, where would you target? This is your test. So,
Up here?
that's decent, but honestly, in this scenario, I think we would take that gap right there could be TP1. Yeah, it'd actually be the gap, not the high. So you'd be targeting the center of that gap.
This
So,
one?
yeah, so mark out that little gap right there just so you can see it.
Where'd it go?
The bearish gap. Yep, perfect. Mark it out. Perfect. Your TP would be that dotted line. Perfect.
Close.
Yep. So is that a 1 to 3? Can you Hover over it. Yeah, it's a 3.5. Perfect. So never take, if you don't have at least a 1 to 3, I would not take the trade. So that's pretty solid. And then this will probably go longer, honestly. So you can have it like theoretically. I mean, this will play out, but I think this will probably continue up. It taps in and oh, actually no. So that would have been a good TP. You see how that was perfect?
Yeah.
Yeah, so you would have hit full TP there and then it comes back down. So that was actually perfect. So did you see the main important thing to see there was how we aligned the 1 hour time frame, the higher time frame, and then dropped down to the 1 minute for the entry. Does that make sense?
Yeah, so we got the entry in the 4-hour gap right here.
Yeah.
And then took take profit at the most recent fair value gap right here.
Exactly.
Perfect. Okay.
So now let's do a different scenario.
Remove drums.
Yeah.
And then do a different day.
Let's go find me any turn on a sessional indicator real quick.
Where's that at?
Top left, turn on sessions. There you go. Now find me any New York Open that's not that one. Some random New York session. Sure, let's go with this one. Looks kind of shit. Actually, go back one more. That one looks kind of trash. Yeah, this one's good. This one's wild. Yeah, this one's perfect. Okay. This is great. Okay. So put me back to 8:30.
8:30 exactly, or
Sure, it doesn't even matter. All right. So go forward one just so your session indicator activates. Turn on your session and then close the session, the indicator little tab in the top left. It irks me. It's just a little OCD thing. All right, perfect. So one thing I want to scroll out real quick. Zoom out. So you can see, I want you to mark out, do you see how London accumulates up at the top there? We had,
right here?
I want you to just look at the London session and I want you to mark out the accumulation, manipulation, and distribution. Here's a hint. They overlap. Far left. On the bottom left of your screen, it happens. So I can actually see. Yeah, I see it. Yep. So there's the accumulation.
Right there.
Do you see the manipulation?
That's right here.
It's where actually we fully take out those lows. So it goes further down. It's that whole lower move. No. It's drag the box down. It's when we take out those lows to the left. So the manipulation move is taking out a high or a low. Yeah, it's that. So draw a line across there, just so you can visualize it.
Down right here.
Yep, that's the manipulation move. So if you drag that whole move down, that's your manipulation move. It's actually like even that stuff at the bottom. It's all of it's all of that.
So it'd just be like this whole.
Yeah, it's that whole shenanigans down there, because that's not the real move. It's just us sweeping that low so we can go longer. And now I want you to mark out the distribution.
It's right here.
It's really obvious. I mean, it's that whole move up. Literally, we distribute for the rest of London. It's that entire thing.
It's this entire thing.
Yeah, and then we accumulate again. So mark out the accumulation. The next one. The next accumulation after the distribution. So yep. So mark out all that. So now we literally accumulated for the rest of the London session. So mark out the rest of London session as accumulation. That basically, yeah, that entire thing is accumulation. So drag your box just all the way across. All of that is accumulation. So what's happening is London accumulated, and then we're getting prepared for a New York distribution. So now I want you to go forward a little bit. Use your little tool to go forward. Click forward. Keep going. Keep going. It's going to be a minute. We want to see London, or we want to see New York. Can you move us to the right a little bit? All right, so now New York opened, and we're probably going to consolidate for a bit longer. So keep going. Keep going. Keep going. Keep going. And stop. Okay, so what time is that? That's 9:25. So it looks like, to me, we just swept London highs. So that's a very important. So mark out London high real quick.
London high was
right there. Yep, perfect. So mark that out. So now we took London highs, right? And we're like, okay, we're going ridiculously long. So either our two options here are consider this the manipulation move and wait for a short, But this is where higher time frame confluence comes in because I haven't looked at this day. I don't know what's going on the higher time frame. I'm only looking at the 1 minute. It's okay. We don't have to look at it right now. But in this exact scenario, the only two things you would really want to do is mark out a fair value gap and wait for a retracement and tap into it for an entry for a long, or assume this is, yeah. So mark out that one little gap there. Yep. And you'd either want to wait for a retracement into that and then go long, or consider this the manipulation move. But ideally, you would have some sort of higher time frame bias, and you would know what's going on here. You would know, okay, this is probably, there's probably a draw on liquidity lower, and you're like, oh, this is just the manipulation move. So let's go forward a couple more candles.
There's actually 2 gaps there too.
Yeah. Let's go forward. So keep going.
Oh my gosh.
Yeah. So then with all those, this is kind of wick theory. With those huge wicks at the top, when you see that, something like that, you could be prone to taking a short. That's a different topic. That's kind of subjective. I'll have to teach you more about that. That's kind of like not a direct concept, but let's continue. So, so we took London highs and now can put us forward some more candles, a couple more. Okay. And then there's our tap in. So now we're like, all right, we could either long off that gap or assume that we're going to blow right past it. And that was our manipulation. And we're going to go short for the rest of the day. I would probably assume we were going to blow past it and go short for the rest of the day, to be honest. So I would wait for us to inverse that. So what time is it right now? It's 9. Okay, it's 9:40. Yeah, so the it's already opened. We already swept London highs. That means we're going shorter for the rest of the day. So I would have shorted probably at the top there with those wicks. But yeah, you can okay, actually I want you to do something real quick. You see how we put in that first gap right there? That bearish gap? No, at the top at 9:30. Keep looking. So that it's a bearish gap. It's black. Yeah, right there. Mark that out real quick. So that's something called the first presented FVG. So the first FVG that gets formed after 9:30 is a very prominent one, and it's a good indicator of which direction price is going to go. That's just kind of a general rule of thumb. It's a good outlier. It's good concept to use. So that could be considered our first FVG. The problem here is if we were to place the trade, this is where it gets a little complicated. Because we've waited, let's say we're in this exact scenario and we haven't placed a trade yet. If we were to place this trade, our stop loss would have to be like $700 or very large, and it would just be like impossible. So what we want to do here is wait until we inverse that bullish gap and then enter. So put us forward like 1 or 2 candles. There's one. We want to wait for a close below it. So wait for one more. And there's our close below. Unfortunately, that puts us pretty low, but you probably could have. I mean, at this point, you probably missed your entry, but let's see if we get a retracement. This is kind of an interesting setup. Yeah, oh, perfect. Okay, so, well, actually, it blows past it. So I would have actually lost that because I would have re-entered on that little tap back into that bearish one right there, and then it would have taken the stop loss. But here, let's see what the rest of this day does. This might be just a weird day. We chop around for a bit. And then 10 a.m. opens. Okay, so this was a scenario where you wanted to wait for 10. So sometimes 9:30 a.m. is bad, right? Because this is a here, can you pull up my stream real quick?
Yeah.
So sometimes with the open high low close theory, 9 a.m. is on its close, right? So 9 a.m. has already opened, had its move, and now it's closing and not distributing, so it chops. Whereas then you want to wait for the 10 a.m., which will put in an obvious manipulation move to either a high or low, and then take it. So that's pretty much it. So this would probably be a scenario where you would have wanted to wait for 10 a.m. and then longed it. Here, actually put on your PO3 indicator real quick. That's probably helpful to have up at all times. Yeah, there you go. So hit next, put us forward a candle, it'll update the PO3 indicator. So that looks like a tap into a gap right there. Put in a long.
I would have longed it right here.
Yeah, you could have. And then put in put your stop at the bottom of that gap right there. Too far. Up, 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 up further. Up a bunch of candles. Like one more candle. At the bottom of that wick of that candle. Up a little bit more. Nope, one can there. Down a little bit. Down more. At the bottom of that wick. Perfect. That's where I would put my stop because it's at the bottom of the wick of the second candle of the fair value gap. I know that was a word jumble, but here, let's see if this plays out. You could have probably taken that further. I don't know what the higher time frame confluence is, but and then yeah, so let's see if this plays out. Nope. So this is just a very choppy day. This was probably just like a wash. I mean, some days are just like that. You don't win all of them. Some days just kind of are trash. And it looks like that was one of them. So let's look at a different AM session.
Just pick any one of them. Want me to just pick random day?
Yeah.
What time?
Let's go 9 a.m.
Okay. There we are.
Okay, let's see what we're looking at. Go to the higher time frame. Go to 4 hour. So the main thing is you really don't want to be taking a trade unless you have a 4 hour, 1 hour daily or weekly confluence. And so that's why it's kind of hard to just pull up any random day. Go to, oh, here's a perfect example. Go to select a bar and zoom back in. Go to the right. Yeah, perfect. Go to the right a little bit. Yeah, one more candle to the right. One more candle to the right. Perfect. The bearish, click there. Perfect. Now go to the 5 minute. Actually, no, sorry. Mark out that 4 hour bearish candle. That 4 hour fair value gap. Yep. Beautiful. Down, perfect. And drag it to the right a little bit. Doesn't have to go infinite, just to the right a little bit so it covers the other candles, sure. And then go to the 1 hour. Okay, now make your box smaller and mark out those two 1 hours separately. So mark out the top and bottom one. You see how there's two now? The 4 hour became two 1 hours. Yeah. Yep. Perfect. There's one. And there's the other. You can get rid of your big 4 hour one. Beautiful. Drag that across. Okay, perfect. So now you have your higher time frame confluence. Drag your top 1 hour across so it covers those other ones. Perfect. Now let's drop down to the 15 minute. 15 minutes a great time frame too for big gaps. So you see that 15-minute gap on the left there? That top one? Yep. You see how we perfectly tap into that? So that would have been a great place to short out of. You were trying to catch, so what you're trying to do is catch the high of day right there, basically. And so now I would say grab your select bar real quick.
Huh?
Grab the select bar tool in the bottom. Very bottom of replay. The select bar. Yeah.
Oh.
And then get rid of that bearish candle and then put us back to the equilibrium. So like, yeah, right there. Perfect. That's good. So you see how we tapped in the 15 minute? I would have taken the sell right there. So sell. It aligns with higher time frame. It's the high of the 4 hour, and then put your stop loss at the top of the 15 minute.
Top of the 50-minute. Wait.
Yeah. Up a little bit. Lower. Lower. Right there. Perfect. So you'd be risking a lot. So what you'd actually want to do in this scenario is drop down to the 1 minute and get an even better entry. So let's go to the 1 minute and scroll all the way to your left. Scroll. Keep going. You're going to have to scroll back pretty far. You can make the candle smaller on the right side. Just make them minuscule. Oh, there you go. Okay. So you scroll in. So now we're going to get an even better entry. So this is the smallest we ever go. And you can see that you can drag your stop loss down actually. Because you see where the gaps end at the top. Up a little bit. Up a little bit more at the top of that wick. Yeah, perfect. So you made it even smaller. So you've zeroed in. You just saved yourself like 500 bucks just by going to the 1 minute. So now this is a pretty decent trade because you have that 15-minute holding up. And let's go back to the, actually go to the 1 minute, scroll to the far right.
Uh-oh, your thing's ringing.
Yeah, that was Ollie calling me. And now let's see if this plays out. Actually, let's target those gaps down there. Those ones to the left. Yep, like one of those. I would move a little bit further up, the middle one, the middle gap. Right there. Yep. Uh-huh. And target the equilibrium of it. It's like the very middle. You can draw your box if you need to. Yeah, perfect. That looks good.
Yeah.
That's the middle. I'll just eyeball it sometimes. It'll usually hit.
Oh,
Oh, you killed it.
oh my. Bro, the same thing.
It's whatever. I mean, it's just replay. All right, perfect. And what RR is that? What risk to reward?
Why is it?
It's because it's huge. It's a 3. All right, perfect. So now let's see if that plays out. Go into a little bit of drawdown. Bounce around in there. And then distribute.
This one's taking forever to play out. Right here, there we go.
Oop. And then you get smackaroonie. That was 2.5K right
It's
there. Or that was
right
5K right there. So.
Smacked right here on the middle of this gap right there.
Yep. Exactly. So it's just about identifying. So remember, you start in the higher time frame. You go monthly, weekly, daily, 4 hour, 1 hour. And then you drop down to the 15 or 30. Then the 10, 5, and then the 3 and the 1. Does that make sense?
Wait, what?
So start at the top, and then you just go down the line.
All these are good?
Yeah.
I don't need the 3 minute, right?
Not necessarily.
So these are the ones that's top down from?
Yep.
Perfect. And I'm just basically...
And you never take a trade unless you have a daily 4 hour, 1 hour confluence.
Daily 4 hour, 1 hour.
Yeah. So if those 3, you don't see like a gap or a prominent high or something really obvious, no trade. Nothing. Like, go to the 4 hour real quick.
4 hour?
Yeah. I'm gonna have to go to the gym in like now, but.
Okay.
So scroll out a little bit. Oh, actually no. So you see that chop in there? The accumulation we had like a week ago?
Right here?
No, sure. I mean, that is accumulation. I was talking about what more recently, like right next to where price actually is. That's a time you wouldn't really want to be trading. Like, you see how those 4 hour candles are kind of all over the place?
Yes.
They're just like, their wicks are wild, they're unpredictable.
This whole cross section here?
Yeah, I mean, price, well, no, I was talking about, it looks like about a week ago, or actually just like last week, towards where price actually is right now. Like towards...
This is May.
No. Move your cursor towards actual price. Yeah, all that. Where your cursor is right now. All that.
June?
Yeah.
This whole
You see how...
box right here?
Yeah. That's pretty chop. So you wouldn't really want to be trading that. But as of recently, our price action... You see how those 4 hour candles right near price? Yeah, that's pretty good. That's pretty tradable. So there's just certain times where you're just like, all right, I just don't really see anything. It's not really that good. And you just don't really want to take anything. You could have... Yeah, so you'll get better at identifying it. Like, on... Do you look at the bottom of your screen? Do you see the 4?
Yeah. Yes.
Put your cursor on that, and then go back up to where price is. And then take your select bar and put it on that candle that has a really weird wick. To the right. To the right. It has a very weird, like, bullish wick. To the upside. Keep going. Keep going. That to the one to the right. One more. Put us forward one more candle. There you go. Okay, perfect. So now Get rid of your boxes on the right side so they don't distract you. Or me, I don't really, it doesn't matter. But, okay. So let's say we came into this day. And you're like, all right, on the right side of the screen, you see your daily. And you see we put in a daily high. So this is our open, high, low, close. So we've already opened. We've put in a high. Now we have to put in a low. Where do you think that low will be? Yeah. Why?
Because I have it in the past already right here.
Well, do you see the 4 hour fair
There's a
value gap
gap
right
right
there?
here.
Yep. So mark out that 4 hour fair value gap. And then drag it across.
It's based off of
And what I want you to understand about this is you see on the right side your daily open, high, low, close. Do you see how we've already opened, we've put in a high, and now we have to go lower?
Yes.
Okay.
To sweep it.
So now you want to think, okay, where are we targeting if we're going to go lower? So you have your 4 hour fair value gap. Let's drop down to the 1 hour. And let's go in there. You don't really, it's kind of there. That small one right there. Yeah, you saw it.
Right here.
Yeah, well, you actually it was the first one you saw. I would say it's, yeah, I would drop down to a smaller time frame. I don't really see
Or
any.
even this one.
No, you want to be overlapping with the previous 4 hour you marked out. So let's drop down to 30 minute or
yeah.
15. Go back. Let's drop down to 15. You don't really see anything yet. Keep going. And this is a good scenario because sometimes there's not any gaps overlapping. So let's drop down to the 10. Let's drop down to the 5. This is actually good. I'm going to tell you what to do in this scenario. If you don't see any gaps overlap, go back. Oh, actually, there's a 5 minute right there. We found it. You see it? Nope. Up. Up, up. Up, 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 up. Right there.
Oh, yes. Right here.
Yeah, we found it. So, there you go. And that's your target. Now drag that all the way across. Drag it all the way across. It's going to have to go pretty far because we want it to go back to current price. You can go back to the higher time frame if you want. It makes it easier. And I'm going to go to the gym after this. Hopefully these scenarios were helpful. These are actually pretty solid. And drag that all the way across. Hit Command Z real quick. And then, yeah, there you go. Try to grab it and just drag it horizontally. There you go. Perfect. All right, now drop down to the 1 minute, and we're going to find our entry. Go to the 5 minute. Go to the 5. Go to the 5. It's whatever. All right. All right. Perfect. So now, what time is it?
1:55.
Go back to. No. Too far. Too far. Go back. Go back to 9:30. Yeah. Go to 9:30.
That's PM.
What do you mean it's PM? Oh, go to the day then. Go to the far right. Yeah, go find 9:30 for me. There you go. So, perfect. Yeah. Put me on 9:30. Beautiful. Okay. So, put us forward a bunch of, so 9:30 opens and you have your bias of short. So what are we looking for? We're looking for a manipulation of highs, right? Mm-hmm. So mark out your highs.
From right here?
Yeah. So that's the high you want to see be manipulated in this case. All right. So now go forward a couple candles. So our low gets taken and we're like, all right, maybe we don't know what we're doing. So we're not going to take anything. And then keep going. 10 a.m. opens. 10 a.m. Keep going. We still want to see our high get manipulated. High gets manipulated. All right, stop. Now we found our high. Now let's try selling this. So we actually, in this case, actually no. We would want to see that gap get disrespected. You see that bullish little 1 minute right there? We would want to see that get inversed. So as soon as that gets inversed, I would take the short, because it would show we're changing direction permanently.
Changing momentum?
Yeah, so let's go right a little bit, too fast. Yeah, there you go. Go back one candle. All right, so as soon as we close below that, and we closed, I would have taken the short. So
I would enter right.
Yeah, so that's a perfect entry. Stop loss at the top of that candle. Nope, too high. Top of the wick of the first bearish candle. A little bit too low. Go back up. Drag it up. Up. Yep, that wick. Down a little bit. Yep, perfect. So that's where it'd be. You'd be probably in one con, but we can do two for now. So it'd be
Yeah, I
decent.
probably would.
It'd be decent risk. But now let's find our target. We already know it's that 5 minute all the way down there. So go back down to our 5 minute. We're on it. Well, find the 5 minute you were targeting before. Target the equilibrium. Perfect. Little 1 to 6. Go back to the 1 minute. Oh, we can't because it's too far back. And now hit play.
I'm gonna say tape probably. Hold on.
Yeah.
My toilet paper.
Beautiful. And now hit. A little 12K trade right there.
Holy cow.
12 bands.
Oh, bandos.
12 bandos. All right.
6Ks are on one con, kids.
Yeah, that was a 6K one con trade. So pretty effective. I'll run you through. Those were actually very helpful. I'll run you through some more of those scenarios. But remember three things. You want your higher time frame confluence. Well, actually four things.